Good afternoon. Does it seem like there are so many moving parts to Social Security and it's hard to wrap your mind around them all? Well, that's why we are here today for another session of TRS Talks, our live stream series. I'm your host for today, Everett Crockett. These sessions are aimed at helping you make sound decisions during the open enrollment process. And that's something we're going through even right now at TRS. So this information will help you along the way as you make your choices during your re-enrollment period as well. We realize that retirement plan is much more than just your pension benefit. And we want to make sure that you are armed with good information from great sources. And that's why we are here today with another wonderful guest. While we won't be answering questions in a live mode, as this is going to be going out today, we have curated some great questions from our members. And we're pretty sure that those questions, which most times are very common, may address some of the questions and concerns you may have about Social Security. However, we want to make sure you stay up to date. So if you haven't done so already, please like and subscribe so you can stay up to date about this content and content to come in the future. With us today, we have Cindy Lundquist, who brings more than 5 decades of knowledge and expertise on Social Security. She began her career with the Social Security Administration in 1972, working her way up to a very high-profile position as an executive assistant to the regional commissioner of the Social Security Administration here in Atlanta in 1987, where she remained an integral part of the organization until she retired in 1999. Since retirement from the federal workforce, Cindy has been a professional retirement consultant, advising clients and teaching employees in the public and private sectors about retirement plans, 401ks, Social Security, and Medicare. Cindy is a frequent speaker for private and public audiences, including financial and law firms, insurance companies, Fortune 500 companies, and government agencies such as TRS. Cindy graduated with honors, and that's a great thing, from Georgia State University with a degree in finance. So members, friends, and those viewing us today, welcome back, and thank you for joining us again today, Cindy.
Thank you, Ever.
Yes, ma'am. We'll get right into some questions, and we'll talk a little bit about the current landscape
Okay.
of things and some key updates, okay?
Absolutely.
So, are there any upcoming updates or changes that people should be aware of right now?
Right now, there's a big change that's coming up. For some people that are drawing a check, I know that when we have an audience with your people, we can have people that are working right now, but we also have some retirees. And for all of the retirees, I want you to listen up because I have some good news.
Oh,
There's going to be, it was announced October 24th that there's going to be a cost of living increase of 2.8%. So all of you that are receiving a Social Security check, your January check should reflect that cost of living increase.
wow.
Which is wonderful. We
Yes, it
always
is.
like to see that.
Mhm.
But there's some other changes that I also want to share that coincide with that cost of living increase.
Mhm.
So when people are working and paying into Social Security, and I know that some of the TRS counties do not pay into Social Security, and some of them do. So all individuals, whether working for TRS paying into Social Security or they're working for XYZ company paying into Social Security, your wages are taxed at 6.2%, and you pay into Social Security so you can get this check someday in the future.
Right.
Well, the amount that you pay, again, is 6.2%, but there's a maximum amount of your wages. And so for those of you that are big earners, if you're making over this year $176,100, you don't pay Social Security tax on anything above it. So Everett, if you're making $200,000 or $500,000 here at TRS, you're not paying Social Security tax on all of it, just the 176 one. That amount's going to go up next year to $184,500. So that was another change. A big change that could affect people that are drawing a Social Security check if you're under full retirement age, which for most of us is 67 years old. If you start your check at 62, you're limited on how much you can earn and still draw your Social Security check.
Okay.
So that amount this year is $24,480. For those of you out there working, drawing that Social Security check, enjoying that check, if you're having that part-time job and you are making too much money, the limit next year is going to be $24,480. So that was another change that will affect people that are receiving checks and that are working and trying to limit their earnings. So that limit has gone up a little bit. For individuals that are full retirement age, which is for most people 67 years old,
Right.
they can make as much as they want. So
Oh.
it's unlimited. But while you're under full retirement age, again, there is that limit, and that limit did go up.
Okay.
Another thing that may be helpful to some individuals that are listening to us today, Everett, they didn't pay into Social Security very much, maybe because they've always worked for a county that did not pay into Social Security. But they did have some jobs in high school, some in college. They retired from TRS, and they're now working a part-time job. If you get enough work credits, you'll draw a Social Security check, but you have to have what is called enough quarters or credits.
Okay.
And those credits you can only earn 4 in a year. And it's used to be a $50 amount. You had to earn $50 in January through March or April through June. Now the amount is just a dollar amount. And to earn 1 quarter this year, you had to earn $1,810. Next year, it's going to be $1,890. So sometimes when I'm out in the field with your TRS people doing a pre-retirement seminar, I'll be a guest speaker and I'll have individuals in there and I'll ask the question, do I have anybody that has their Social Security statement and it says you just have 36 credits or quarters? Should I get the rest? And I always tell them, if you're that close, you better get a job.
Yeah, you should.
And that I always want everyone to know how much money you have to earn the credits. So next year, if you had a job and you made $7,560, you have enough credits and you're good to go.
That's good.
So those are the big changes. Medicare, we're going to talk about Medicare maybe a little bit later, and I'll talk about Medicare when we get there. Okay?
Well, one of the things you mentioned just then, Cindy, was relative to cost of living increases. And that was going to be one of our next questions. But I'll just say this. I know that many Americans are focused, myself included, on our expenses and making choices based on the rise in prices and goods. So I know expecting that COLA to come forward is going to be a big bit of relief for those people. So I'm glad to hear that. And I know you too are glad to hear that for those.
And that cost of living increase is always based on consumer price index increase.
Okay.
So CPI this year went up 2.8%, and that's why the checks are going to go up 2.8%. Now, when we were going through COVID and we had real high inflation going on, we had even bigger cost of living increases. But 2.8 is probably a good average, I would say, on a normal basis. But I also will tell you that there have been years that there were no cost of living increases in Social Security. There were only a few in my lifetime, only a few because there was no inflation. Okay. But most often, as you and I both know, we've been around a day or two.
Yes, we have.
We know that there has been quite a bit of inflation.
Certainly true. Yeah. Certainly true. Well, Cindy, what does the Social Security Administration use to determine when they should award these types of adjustments?
It's in law.
Oh,
it's in law. So it's not like Congress has to get together and fight over it and, decide that we're going to get it. It's in law. It's based on consumer price index. And it's always the first check in January that you're going to receive. Your January check is actually for December. So technically the cost of living increase is December of the year, but it's reflected in the check that comes in January. But it is in law. So if you looked at the Social Security Act itself, which would be very boring for all of you to read, but it is in there. It's a part of the law itself.
That's good information to know as well. I had no idea that was the case.
Yeah.
And so we'll move on to the next question, which is this. We witnessed the big change this year regarding the windfall elimination provision and the governmental pension offset, eliminating the reduction of Social Security benefits for our TRS pension recipients. Is there anything else that pensioners should look out for regarding those changes?
I want to ask, I would like to ask all of you that are retired or have friends that are retired from TRS and they did receive a smaller Social Security check because of the government pension offset for spousal benefits or the windfall elimination for their own Social Security checks. If they have not received the raise or they didn't know about it, and believe it or not, I still get calls from individuals that are not from TRS, but friends that work for the federal government that I have that it affected them, that they didn't know about it. So my ask for all of you that have friends that are retired, if you know they're drawing Social Security or they are not drawing Social Security because they thought they could never receive it, please encourage them to contact Social Security because they don't want to lose benefits.
Wow.
And I have had, as I said, a couple of friends that have reached out to me and they had no idea the law changed. And we don't want to lose money. And the other thing that I would like to say to all of you that are already receiving Social Security and you did get a back check, and I am sure that I got a back check myself, so we're all real happy to get it. But understand that Social Security is taxable. So, if they did not hold out any taxes, if you're having taxes withheld from your Social Security check, they should have withheld taxes from that underpayment. But I don't want you to think that was not taxable. So if you weren't having taxes withheld, I don't want you to forget that you could have a little bit more taxes that you're going to owe.
And that's good information. I'm not quite there yet, but that's definitely something I'm going to tuck away in my memory bank relative to taxes. Yeah, that's something you want to be well aware of.
Yes.
Well, here we are in the last quarter of 2025 and looking toward 2026. So let's ask a couple of questions about the future here. What changes or policy discussions are expected in 2026 that could impact Social Security benefits or eligibility?
Every year, Social Security comes out with a trustees report that talks about the solvency of Social Security. And if you get your statement, if you went online today and got your statement, it would say at the bottom somewhere, based on the current solvency of Social Security, it doesn't say it quite like this, but everybody says it to me, Social Security is going to be bankrupt. And actually what happens for many, many years of my lifetime and your lifetime, the money that came in to Social Security and payroll taxes that come out of your paycheck was enough to cover the checks being paid.
Okay.
So money would come in, checks were paid out, and there was actually reserves that were set aside. And the reserves, there's been reserves and reserves. Well, now we are at the point now that the money that comes in does not cover the checks going out.
Oh my goodness.
And they are using the reserves to make payroll. And the reserves will be depleted by 2034. So if you get your statement, which I'm going to tell all of you to do probably 2 or 3 times today, I want you to get your statements and it will tell you when the solvency issue is going to come to a head. And right now, at the trustees report that came out September of this year, it is 2034. So what I did today, knowing that I was going to have the opportunity to talk to you about Social Security, I looked to see if there are any bills pending that could change our future Social Security. And I will say right now, because this is November 5th of the year, I don't anticipate any changes because the legislation right now, well, nobody's in Congress is really talking right now, so I'm not anticipating anything that would pass today.
Right.
But I wanted to read to see if there was anything that was pending that could impact us. And I'm going to mention 3 things that that are introduced, but it doesn't mean that they'll pass.
Right.
So I think more than anything, I want you to know that there has to be law changes to make the system solvent beyond 2034. And a couple of things that I read. One, remember at the very beginning, I said that if you make your $250,000 or your $500,000, you're only going to pay Social Security tax on $184,500. One of the bills is to eliminate that. And if all of your wages were taxable, so the higher earners would help fund the system. And that has been introduced year after year after year, and I've been talking about this for years now, and I have said it for so many years. It is such a quick and easy fix, but they have not done it yet. But that's one thing they've talked about.
Okay.
Another thing that they've talked about is to change the formula. And whenever we talk about how much you're going to get from Social Security, there is a formula.
Okay.
So there could be a change in that. Another thing that they said in one bill was to increase the full retirement age from 67 to 70. So you youngsters out there, I would say that that would be something that you would need to know. But all of the bills, like to change the retirement age to 70, it wouldn't even start until 2034. I mean, it's in the future. So understand that that's not for you, Everett. I know you're a ways away from you're going to draw Social Security, so it doesn't apply to you. It doesn't apply to me because I'm already over full retirement age, so it doesn't apply to me, and it doesn't apply to anybody that's near retirement. So what I'm going to say is I don't anticipate any big changes in Social Security this year, and I don't expect any changes next year. But someday down the future, we'll see some changes in Social Security.
Well, I can't tell you just how timely this is for me. Surprisingly enough, I recently received a Social Security statement, ladies and gentlemen, and I actually will be 70 in 2034.
Well, there we go.
So what really drew my eye as I looked at the statement, well, actually, I just wrote that note about the solvency. I'm going to go back and look at that to see where that falls on my statement. But what really impressed me was, as it laid out projections, the full retirement age for me at 70, which would be 2034, I kind of liked that number when I looked at it.
Yeah.
So I had to think about it. I mean, I got grandkids now. I want to spend time with them, as you know, as you were talking about the soccer field or the lacrosse field. So those are things to think about. But certainly 2034, I would love to see it be very solvent, well beyond that. Beyond that.
If it's not solvent, what they have projected is that you would only get 81% of what you were supposed to get.
Okay. Well.
So, you would see a haircut in your little paycheck, and nobody wants to see that. So I believe something will happen. As again, I don't believe anything will happen this year. I don't believe anything. Something could be written in law next year, but it won't happen it'll be future benefits.
Understood. That's great news. I'm hopeful. I am hopeful, ladies and gentlemen, hopeful. Well, one more question here. How might the financial outlook of the Social Security Trust Fund influence future benefits or retirement planning?
Well, that's a great question, Everett. And this is how I would look at it. Anybody, as I just mentioned, if you are already receiving a check, or if you're near retirement, and when I say near retirement, I would say anywhere from probably 57 on age-wise, 57 on up, the statement that you receive is accurate.
Okay.
And it should be, if it's not what's on there, it will be very, very close to that amount. But if you are much younger than that, I would anticipate that there could be some changes in Social Security, meaning that you would get a smaller check, which means it puts the responsibility on you to save more.
Yes.
So I know that in TRS, you are very fortunate to have a pension. And I receive a pension from the federal government myself, and I understand the impact of being able to get that monthly check. But I also know that you have a 403B or a 457, I'm not sure what it's called. But if you have the ability to save for other, if Social Security is not going to be as big as you think it's going to be, maybe you should be saving a little bit more.
I agree with that.
So I think that that's one thing that I would consider.
Okay. Well, as it relates to planning and preparation for our members, here's another question. What are the top 3 things active members should be doing right now to prepare for retirement and maximize their Social Security benefits?
Well, I think the very first thing that I would encourage, and I said I was going to say it numerous times, I'm going to say it to you, all of you. I want you to get your Social Security statement on an annual basis. And all you need to do is go to Social Security's website, which is ssa.gov, and set up an account. And you can get this statement any day of the week after it's set up. So on an annual basis, I want you to get that statement so that it gives you an idea of what you can anticipate But also, Everett, remember when we were talking about law changes?
Yes.
If there's a law change, they will correct these statements to reflect the proper information.
Okay.
So if you're only 40 years old, and I just told you if you were 57 or older, don't worry. But if you're 40 and you're thinking, well, what if they're going to change this? I want you to be looking at it on an annual basis. And I
Okay.
think that that's one thing.
Yes.
And again, I would reiterate, I would be saving in my 403B, just to help, a little bit of icing on the cake. And just be proactive, not only in helping for yourself, but I think you need to be helping your parents too. I mean, we
Yeah.
need to be making sure that they're getting the right things
That's real
and doing
good.
the right things. So
That's
help
real
them as
good.
well.
Yes, that's very good information right there. Now, if we will not be getting a Social Security benefit from 20 or 30, for 20 or 30 years from now, should I even pay attention to it?
Of course, if I'm talking to young kids, and I will tell you when I do talk to them, if I say Social Security, their eyes roll back in their head. The eye roll.
Yes, I
They don't
do.
want to talk to you.
Yes, I
They
do.
give you the eye roll. I still, but I remember a day working for Social Security. Now, I've been retired for 25 years from Social Security, over 25 years. And when I would be talking to financial planners, they would say, we don't even tell our clients to plan on getting Social Security.
Oh my goodness.
Well, guess what? All of those people are now drawing a Social Security check. So I say to the young people, it may not be what we're looking at today, but get that statement. It could be a small portion of your retirement plan, but it is a portion that you'll be able to depend upon. So they
Yes.
need to get that statement.
Okay.
Again, I told y'all I'd say it over and over again, and I'm saying it over and over
But it's good
again.
information, so it's worth repeating.
Yes,
without a doubt.
absolutely.
Yes.
Absolutely.
So how can members coordinate their pension benefits with Social Security to avoid surprises in retirement income?
Well, I have to say Georgia TRS is a stellar group of people that educate their employees on their pensions.
Yes.
And I think that is and that you don't find that everywhere. You just don't. And I thank all of you that are participating today, even inviting me to speak on Social Security. That tells you the value of what they believe in their employees.
Yes.
So I think that to continue to be educated, whether it's offering something like this or going to one of their classes that they have, to keep up on things. It's important to keep on things. The problem also, I've encountered a few things myself of finding bad information. I know we're all tied to so much of our social media.
Yeah.
And if I type in Social Security, then all of a sudden, then I'm getting stuff. And I received something just probably day before yesterday that the Social Security retirement age is increasing. Well, it's not increasing. The law that changed it from 65 to 67, that law was passed in 1984.
Oh my goodness.
So there wasn't a law that changed. And so there's a lot of misinformation out there. So I want people to be diligent in accessing the resources they have with TRS. And that's why I keep, I'm always honored to help, because I think that the goal to help the employees is very strong in this company, or not company, but this the system that you have here.
Yes, ma'am. And that's a great note, folks. Lots of information out there. Now you could type in a keyword and you get more information than you ever could have wanted. And that's another reason why we do these types of live stream sessions here at TRS Talks, and we bring in those who know for sure the right and the wrong. So that's another reason we're so glad to have you with us here today, Cindy.
Thank you, Everett.
Now, Cindy, for retired members, what steps should they take to ensure they've received the correct benefit amount?
Oh my, I'm saying it again. Get that statement.
Get that statement, number one.
Get that statement. You have to get that statement.
Yep.
But also, and very, very important, Social Security uses your highest 35 years of earnings to calculate your Social Security check. And when I say your highest 35 years of earnings, I'm talking about earnings that you paid Social Security taxes on. So if I worked for a school system and I'm not paying Social Security taxes, but I've worked 25 years for that school system, they're not using those 25 years. It's your highest 35 years that you paid Social Security taxes on. So when you get your Social Security statement, when you set up that account, you can also get a record, and it's right underneath where you have requested the statement. You can get a breakout of your full earnings. And since it's based on your highest 35 years of earnings, take that extra step and check and make sure those earnings are correct.
Yes.
So if there's a missing year, that you can get it fixed. Okay.
Well, you said the last 35 years. I'm often reminded, and I share this story a lot. I'll never forget my first job. I was making $2.45 an hour. I'm proud to admit it, but that was a lot of money then. But when I would see all the deductions, Social Security and who's FICA and all that other kind of stuff. So yeah, I've been paying it a while. But the good news is it's based on our last 35 years, and hopefully for most of us,
the highest 35.
Yeah, the highest 35, and hopefully that's near the last 35.
Yeah, and
that's
normally it is.
Yes.
And normally it
is.
is.
Absolutely. Yes. Now, Cindy, what are some common mistakes people make when claiming Social Security and how they can avoid them? Because I know there's got to be a few.
Okay. Well, if I hear it once, I've heard it, I can't tell you how many times ever. I'm taking my Social Security at 62. I don't care, because I'm starting it because I'm not going to wait, because it may be gone. I hear it all the time. I want people to start their Social Security at the appropriate time.
Yes.
If you are working when you turn 62 and you're making over the earnings limit, remember I said it's going to be $24,480, and you're making well above that, you don't need to file for Social Security, because they're not going to pay you. And if you don't need it, if you have a spouse that's working and they're making good money and you really don't need it, the longer you wait, the bigger the check.
Yes.
So I don't think it should be, I think that this system is going to go bankrupt. I don't want people to think that. I want people to start it when it's appropriate for them.
Yes.
They either need the money and they're not working, or if their life expectancy is not long, it could be that they want to make sure that they get their benefits. But I don't want people to just say, I'm going to start at 62. I want you to think about it first and look at your picture. And everybody's picture is different.
That's very true. I'm only speaking about Everett Crockett's picture here, but I heard you say the longer you wait, the bigger the check. I kind of really like the sound of that. I'm just speaking for me and nobody else.
And that is the truth.
So, and as we want to always do, folks, we want to remind you to like and subscribe to our TRS Talks sessions, so you can stay up to date with great information like this from Cindy and others who will be joining us. So, Cindy, what should members know about the timing of enrolling in Medicare to avoid penalties and coverage gaps?
Okay, so Medicare is very, very important. When you turn 65, and for all of you that it's coming up, you'll know when you're turning 65. About 6 months before you turn 65, you'll be inundated with correspondence about Medicare, about filing for supplemental plans, about filing for Advantage Care plans. You'll be inundated with all types of correspondence. So the importance of enrolling in Medicare when you turn 65, if you file within 3 months before to 3 months after your 65th birthday, you will not pay a penalty in your Part B premium, which is let me explain. Do you mind if I explain the various parts of Medicare for a moment?
That would be great. I would really appreciate that.
Okay. So there is what is called Medicare Part A, which is inpatient care in the hospital. Medicare Part A is free as long as you are have enough credits to draw a Social Security check. It's free. It's no premium for it.
Okay.
So if I go into the hospital and I have Medicare A, basically it's all covered except a deductible. Medicare Part B, as in boy, is what I call the doctor's part of Medicare. It covers doctor bills, lab tests, x-rays, outpatient services at the hospital, and some durable medical equipment.
Okay.
Medicare Part B is not free. In 2025, the premium is $185 per month per person. The rates have not been announced for 2026, but I did a little AI research, and the projected amount that they have come up with is $206.50, which is a sizable increase, the most sizable one we've had in a long time.
Oh, wow.
It's a $21.50 increase. And I don't know that that's going to be the rate. So I'm saying that to all of you now, but it may be something less than that, maybe more than that. But that's what the projected amount is to be. Some people that are high earners, over 100, and I don't have the numbers in front of me, but I believe it's about $116,000 for an individual and $230,000 for a couple. You could pay a higher premium than the 185 or the 206 if that's what it's going to be. That's part B. And so you need A and B. And then there is something called Medicare Part D, which is the prescription drug part of Medicare that covers all your prescription drugs, not while you're in the hospital. That's part of your hospital bill, but for when you need to go to the pharmacy and get a prescription. The Part D of Medicare is sold by private insurance companies. So you have to, and it's an annual event. You go online and you find the plan that works for you and based on the prescriptions you take. So that's the three major part of Medicare. And then there's something that's called Advantage Care plans. And some people refer to it as Medicare Part C. And they are the Advantage Care plans are the HMO and PPO plans offered by Medicare. And I believe Georgia TRS has something like that, and I don't know if you can help me with that or not.
I would not be the right authority for that, as it wasn't a big concern of mine when I did mine. But I'm certain.
I think that is something like that. I'm not positive. I talk to so many different people and companies and entities that I can't keep up with everyone. But I want everyone to know what it is. So to avoid any penalties, you need to file 3 months before to 3 months after your 65th birthday. And if you have an Advantage Care plan, you also, and if that's what TRS has, then you would want to file for Medicare A and B, and you would get that Advantage Care plan. And you probably don't need D because some of the plans cover the D with the Advantage Care plan. But there is a time that you should not file for Medicare at that time. And I'll use you as an example. Everett, let's say you love your job.
I do, by the way. I absolutely love my job.
So you love your job.
Yes, I do.
And you turn 65 and you're still here working. You're working for TRS and you don't have any plans to retire till 70 because you saw that bigger number.
I sure did.
So you said, I'm not going to retire till 70. If you're still working covered by group insurance through employment, Medicare is secondary to this insurance. So it wouldn't be cost effective to pay $185 or $206. So if you are still working when you turn 65 and you're covered by group insurance through employment and there's 20 or more employees, which TRS definitely has more than 20 employees, then it's not cost effective. And so what you will do, Everett, is you'll have an 8-month window from date of retirement to file for Medicare, and you will not be imposed a penalty. So no penalties to you. You have that 8-month window. You file for it then, and you pay whatever premium it's going to be. But let's say you turn 65 and you have retired, and you think, well, I don't need to file for Medicare. I don't need that Medicare. I have my insurance. Well, if you don't file and you are not employed, covered by group insurance from your employment or your spouse's employment, then every year you delay Medicare, the premium is increased 10%.
Oh, my goodness.
So you don't want to mess that up.
No, I do not.
You don't want to mess that up.
I do not. And I know I'm not alone.
Yeah, none of you want to mess that up. So you have the open enrollment 3 months before to 3 months after your 65th birthday to avoid the penalty, unless you're still employed by group insurance through an employer.
Great information.
Okay.
Great information right there. Well, speaking of Medicare, are there any upcoming Medicare changes in 2026 that could affect costs or coverage?
The one thing that will happen, and it actually began in 2025, and it's with Medicare D.
Hmm.
We used to have what was called the donut hole, where your Medicare D would pay so much, and then they didn't pay anything for a while, and then they started picking up again.
Hmm.
Now there's a maximum out of pocket of $21,000. Excuse me, $2,100.
Okay.
21,000.
Okay.
$2,100. And if you
Hmm.
have prescriptions, and unfortunately, all of you probably know of somebody that has an illness that their medications is just out of sight.
Yes.
And if that's the case, know that there is, and that is one big change. And honestly, I have read that they are working real hard to get all of the prescription drugs down to a more reasonable price
Good. Good.
for all of us.
Yes.
So hopefully that'll happen as well.
Well, that's great news. Well, Cindy, as we come close to the end here, are there any final pieces of advice you'd like to give to our
I have
audience?
one thing that I meant to mention earlier that I
Sure.
want to share with you.
Yes.
In July of this year, the big beautiful bill was signed.
Yes.
Remember, the big beautiful
I
bill was
remember
signed. And after the big beautiful bill was signed, there was a lot of information out there, and probably all of you have heard it as well. Social Security is not going to be taxable.
Hmm.
That is not correct.
Oh my goodness.
Well, it could be correct for some people, but not everybody.
Okay.
So what the big beautiful bill says is that if you're 65 or older, you could have up to a $6,000 deduction off of your taxes
Hmm.
that could make your Social Security check not taxable.
Hmm.
But if your income for an individual exceeds $75,000, or for a couple over $150,000, that $6,000 deduction gets smaller and
Oh,
smaller.
wow.
So I don't want anyone to think that you may not pay taxes on your Social Security. Some of you may not. It depends on what your other income is.
Sure.
Some of you are going to be receiving a TRS pension. You could have income coming in from a spouse. So I can't say wholesale. And the other thing that I want to make sure that people understand is that law ends January 1st of 2029.
Wow.
So people that are not 65, it does not apply to you. People that aren't going to draw Social Security till after 2029, it's not going to apply to you because the bill has a sunset clause on it. So it does end. And I think that there's a lot of misconception about it. And I just wanted to mention that. Right now, if your adjusted gross income is above $32,000, or excuse me, $25,000 for an individual, or $32,000 for a couple, 85% of your Social Security could be taxable. So it could be that you'll be paying some. It could be some of you with the $6,000 deduction, you won't be paying any. But I can't say.
Yes.
I can't say
Understood.
wholesale. Okay.
Understood.
That was one thing that I wanted to make sure that it was clear.
Well, we appreciate that. We truly do. Well, Cindy, thank you so much for joining us again.
Thank you.
It's always a pleasure to have you here, and your dedication for informing the public and our members on such an important topic as Social Security.
Yeah.
We really and truly appreciate that.
Thank
Well, that
you,
wraps it up for us today, folks. And if you haven't, make sure that you like and subscribe so that you too can stay up to date on things that affect you as you journey down your path towards retirement. So, and that you can be notified about events such as this and other upcoming events. This is the last TRS talks during the open enrollment season here. And we want you to look out for future opportunities to see some of the content that we have. And it's all geared toward empowering you. And you are the one that matters for us. And you are the reason that we do what we do. And we really appreciate you. So until next time, we hope you enjoy the rest of your evening, your school year, and we hope to see you again soon on TRS Talks. Thank you so much for joining us. That's great information.